Citi's Asia CEO Stephen Bird joining us on the program this morning. Good to see you, Stephen. Happy Halloween, I guess. That's appropriate.
Yeah, thank you. Great to be here, Susan.
Now, let's first talk about the shakeup at the banking regulator, CBRC. Obviously, they issue your licenses on the mainland.
They do indeed. In fact, we have frequent contact with the CBRC. Lu Kong, who'd been in the job for the last several years, has a tremendous reputation. But the depth of quality in the regulatory environment in China means that these are very well-planned moves.
Yeah.
And we wouldn't expect a change in policy from the CBRC.
Yeah, you're opening a lot of branches right now in China. That's your focus, isn't it? What about, I guess, headcount? The last time we talked, your goal was 5,000. Is that still on track?
Well, right now, actually, we're about 6,000 in total in China. And this week, we are opening in Wuxi. That will be our 12th city. Over the last 3 years, we've actually tripled in Greater China from 50 to 150. Actually, just last month, we passed 150. That is a focus. China remains the largest emerging market in the world, and we feel very strongly that we have got to build out a presence there.
All right, so you have 6,000 people under your headcount in China. Are you looking to up that even more in the next few years?
Well, what we do is the headcount really follows the pace of expansion. So when we expand distribution or we build new product functions, we add people as we need them. Mm-hmm. We also have centers of excellence in China that support the rest of our business in other parts of Asia. Mm-hmm. So it's a planned thing. I mean, of course, we are focused very much on efficiency and effectiveness in China as across our entire company.
Right.
So we replace headcount on a critical basis.
Right. So at this point, maybe considering we have a bit of a slowdown in the Chinese economy, it's
well,
a wait-and-see sort of position?
Well, our third quarter, we showed positive operating leverage in Asia, which meant that we grew our revenues faster than expenses. So you can see that we're very focused on running the platform in an efficient way.
Now, what about these concerns about bad loans in China? Over-leveraged property companies that are going to hit the banking system. We heard Jim Chanos, who was with us on Friday, still echoing those same concerns. What are you seeing on the ground, actually, in China?
Well, we just saw the Chinese banks report very strong earnings, and that was to be expected. It was mostly in line with expectations. NPLs are running at about 1%. We're forecasting that they will rise to about 2%. Mm-hmm. But Chinese banks stocks look pretty cheap. I mean, the stock prices have been beaten down so much. We think that the prices reflect 3 to 4% NPLs. So we see the future losses as they increase as very manageable for the major banks in China.
All right, so maybe the fears are a little bit overblown then in your view.
I tend to think so, yeah.
Yeah, okay, well, let's talk about the world of banking, because what a week it's been. We had this huge deal, of course, in Europe, and you being a big Asia banking CEO, what's the chit-chat amongst you banking heads about this 11th hour deal in Europe? Is everything solved now?
Well, it was clearly welcomed to see the plan last week, and we think that the main components of the plan are right. The haircut in Greece of about 50%, people could argue for 60%. We think that the bank recapitalization, the banks need to hit 9% Tier 1 by the summer, and if they can't raise the capital in the markets, they will be funded by the governments. And we think that the leveraging of the Stability Fund is the right thing to do, using those two elements of insurance and a structured investment vehicle that will draw in private capital. So the broad brushstrokes are in place, but after the planning comes implementation. So, and that has to follow fairly quickly. We think that next year, Portugal and Ireland will follow this same model that is being cast for Greece. But the overall problem is highly manageable. I mean, debt to GDP in Europe is 90%. Debt to GDP in the US is 100%.
Right.
So clearly the Western world is going through all the mechanics of deleveraging, and that will have to continue.
Okay, so how does that affect Asia? Let me just ask you quickly. If we have these European banks having to recapitalize to 9%, does that mean they're going to have to shrink their balance sheets? Does that mean business in Asia might go down for them? Is that an opportunity for you?
Well, we think that what that does, the stress on market capital, recapitalization of the banks obviously makes credit tighter. We think Europe will have a mild recession. We've actually just revised our numbers to minus 0.3, 0.5 for next year. For Asia, of course, the world is slowing down, and the more export-sensitive countries in Asia, so Hong Kong, Taiwan, Singapore, Malaysia, Korea, there will be a cooling, and we can see some evidence of that. However, Asia will grow at 2.5 to 3 times the pace of the Western world.
Right.
In a world where the global economy has gone from 5% to just over 3%, we forecast next year is going to be slightly under 3% as a global economy.
Wow. Okay. Well, Stephen, thanks for dropping by. I hope your kids enjoy the Halloween night today. I'm sure you'll take them trick-or-treating. Stephen Bird, Citi's Asia CEO, joining us on the program.